Hi, everyone. Welcome to the Canadian Passive Investing Show. I'm your host, 𝗖𝗽𝗶 𝗖𝗽, and I'm joined by my co-host, August Biniaz. We have another great show for you today. Please like and subscribe as it helps us build our channel and allows us to keep bringing you great content and expert guest speakers. Our mission is to empower investors to earn passive income through real estate investing. Now, today we're joined by Nick Zotos. A little bit about Nick. He practiced law for 15 years as a tax and estate attorney in New York City and Charlotte, North Carolina, representing high net worth clients and Fortune 500 companies before becoming a full-time multifamily syndicator and investor.
Yes.
We believe that this interview with Nick will bring great value to attorneys across Canada and the US looking to retire sooner and reach financial freedom through real estate investing. This interview will also be very helpful to both active and passive investors looking to learn more about the tax advantages syndicated real estate investments could offer. Nick, thank you so much for being here today.
Welcome, Nick.
Thank you for having me. I'm glad to be here. That was a great introduction. I think, as you mentioned, I am formerly a tax and estate attorney. I think in my past career, people weren't too excited to talk to me talking about death and taxes. So hopefully we'll have a little bit more exciting conversation here today with you.
For sure. For sure.
Why don't we start off, Nick, by you telling us about your background as an attorney and then this transition you did to being a real estate investor?
Yeah, so I practiced for about 15 years. My focus was in tax and estate planning, as you mentioned. I started with a firm in New York City in Midtown Manhattan, working with a lot of high net worth individuals and family offices and things of that nature. And it was really kind of a progression how I transitioned into real estate investing. To be perfectly honest with you, I think it probably started when I was in law school. my transition away from practicing law, that is. I think it's something inside of me. I always knew that I wanted to own my own business, and I was always very fascinated with real estate. So when I started practicing, I actually worked with a lot of clients who were very involved with real estate investing. A lot of my clients were investors or developers or syndicators. So I think that was sort of the initial sort of eye-opening for me to sort of get familiarized with real estate investing and particularly commercial real estate. So I think that was sort of the springboard to really plant the seed in me for this ultimately transition that took about 15 years. So, and we can get more into that as we talk a little bit more.
For sure. No, that's a great transition. A story here in Vancouver, there's a private lending institution that was spearheaded by an attorney who was in practice for a long time. In his 60s, he started this company and now is one of the top, I won't say the name, but it's one of the top private lending companies, institutions here in Vancouver. But, a lot of time attorneys are accountants as well. They're in the business. They're in the getting to know everything about their client's business. And they say, hey, listen, this person is spending way less time than I am. I'm doing most of the work back here anyways. And they're taking most of the profit. So it seems that accounting and law seem to be two backgrounds that kind of catapult a lot of people into different businesses. So it's interesting to hear that as well.
Yeah, I think that's definitely true. I think I got tired of riding shotgun on my clients' deals and wanted to get into the driver's seat a little bit there. So
nice.
I think there's definitely a part of that, where you're sort of a wannabe entrepreneur and then you see people do it and then you're like, well, I'm kind of really doing all the work. So why don't I just take the next step and sort of put myself out there and take a leap of faith? So
For sure. And I want to touch on another point here is that obviously, as people, we're creatures of habit, right? We get used to having a certain job or having a certain work. We get used to the income we're making, and our lifestyles are connected to that income relative to the income we're making. In most cases, it's good to have a ratio, not obviously overspend, but underspend. But what that does to us is now we become complacent. And we're not out there trying to take risks or trying to switch careers at a certain age. So talk to us about kind of leaving that career and how did you balance all of that, and where do you start from? How do you go from being an investor? Are you a passive investor? Are you an active investor? How do you start becoming cash flowing so then the funds you're making in your new venture are sufficient enough to pay for your livelihood?
Yeah, no, it was definitely a progression. And I think it's always good to kind of hear other people's stories because there really is no sort of one size fits all. But I think it's just kind of useful to hear other people's journey. So yeah, a little bit about my journey. Like I said, I was always kind of interested into being entrepreneurial, and then I started with working on my clients' deals, and then I started as a passive investor when I was still with a law firm in New York. Started investing in some deals, started investing in some syndications. But really the turning point for me was, I think it was about 6 years ago, my wife and I sat down and we had actually decided to leave New York. My wife's a native New Yorker, so it was a big change for her. I'm originally from Chicago, so I actually never intended to permanently settle in New York. I went out there for school. I completed the tax law program at NYU, and then got a job with a firm out there, and figured I'd practice for a few years. A few years turned to almost 10 years. So basically, we kind of got to the point where it was time to make a change. We wanted to settle down, start our family, and we were just kind of sat down and made a list of places that we thought we might like to live, and Charlotte was one of the places that was on our list. And it's kind of an interesting story. We actually got in the car and drove down here for a long weekend. This was back in 2014, never having been to Charlotte before, not really knowing anybody here, and pulled off the expressway and pulled into this kind of charming neighborhood right outside of downtown Charlotte. And we were kind of driving around. We're like, oh, this is pretty nice. We could, kind of see ourselves living here. And then, I remember there was an open house. And we're like, oh, let's go pop into this open house and look at this house. And we're like, wow, this is a really charming house, And we're like, and it's affordable. We're coming from New York City where nothing is affordable. I mean, a closet is not affordable. So, it kind of, clicked at first, that this was kind of our vibe. It was kind of a good place to settle down. And then, fast forward, I think it was about just a month or two later, I got a call from a recruiter saying there was an opportunity open with a firm down here and that they were interested in me. And then I went through the process. They made me an offer to come down. And actually, the exact same week that I accepted the offer to relocate down here, my wife and I found out that we were going to be pregnant with our son, who's now 6 years old. So it was definitely a lot of big changes. And, life has a way of doing that sometimes where, you feel like you said, you're kind of stuck in the status quo and you have your routine, and then everything changes at once. So I don't necessarily recommend uprooting and moving across the country and starting a new job and, buying a home and, having a child all at the same time. But we did it, and I'm still here. So I think ultimately it was definitely a great life-changing experience for a lot of different reasons to come down to Charlotte. And one of them being, I think ultimately I always knew that I wanted to be involved in real estate. And when we drove down here, I kind of was able to, you can see it, you can feel it, the buzz that was happening. So I kind of compare that to, when I was living in New York City, I lived, first I lived in the Village, and then I lived in the Upper East Side where a lot of my clients were in Manhattan. And then I actually lived in Long Island City. This was back in 2014, 2015, when we were first coming out of the Great Recession. And, there was a buzz. There was a buzz in that area. If anybody knows, about New York, that area has exploded in the past, 5, 6, 7 years. And it was kind of like, when you walk around, if you kind of have an instinct for real estate, you can see it and you can feel it. And that's what I love about real estate, is that it's really tangible. If it's something that just, you're attracted to, that you're really interested in it, you kind of know it when you see it. And I think it's hard to communicate that to somebody who's not interested in real estate, but it's just, it when you see it.
Yeah, and August and I actually were just visiting Charleston, South Carolina, and it's a really beautiful place. So
yes, your guys' neighbor, but Charlotte is one of the cities that we were planning to move to the U.S.
Yeah.
So Charlotte is one of the cities that we actually were on top of our list of places to move to. But when we saw Charleston, we fell in love with Charleston as well. So the Carolinas, nobody really thinks about the Carolinas. There's you got the Arizona people, west coast of Canada. You got obviously Texas. There is a big buzz. You got Florida. But North and South Carolina, they're not really on top of the list. But when we went there, we realized that a lot of people are moving like from New York, just like you said.
Yeah. Yeah. I think you guys are in Vancouver, right? So being on the West Coast, I think there's a lot of sort of West Coast centric migration where you've got the Arizonas and the Texases. And then on the East Coast, you've got a lot of people moving to the Carolinas, a lot of people from New York, New Jersey, Connecticut. I joke that, pretty much every day I bump into somebody who's moved here from New York. I think the most recent statistic that I read was there are 700 people a week that are moving here to Charlotte right now. So it's definitely a boom town. It's definitely a growing town, and it's interesting to see just the way that it's developed just in the short 6 years that I've been here.
Wow,
Great,
business
great.
friendly and lower cost of living. Everybody's flocking there.
And
I
we'll
love it.
we'll touch on those the things in just a moment
And
here.
Nick, I was just wondering, what was it about multifamily, particularly syndicated investments, that interest you to get started?
Yeah. So, and I guess this is sort of a tie-in to your last question about how I sort of ultimately made the leap, from practicing to real estate investing full time. And this is a little bit of an interesting story as well. I warned you, August, I've got stories, so you might have to edit some of these
Go ahead,
down.
man.
But so one day, I'm in Charlotte now. My wife and I are in Charlotte. We've got our son. I think he's a couple of years old, and I'm entrenched in trying to build a practice, right? I'm trying to make a go of it in law. And it's definitely not a 9-to-5 job. Anybody that knows, it's very, very consuming, especially if you're looking to build a practice. But I never sort of gave up on that seed of, like there's something in real estate for me. There's something there for me. So one day I was really, and I'm a big firm believer in sort of, I guess it's the law of attraction, if you will. If you really focus energy into something and put action to it, that somehow the universe will send you a sign and bring it back to you. So one day I was walking down the street and I was thinking about real estate. I was like, what am I going to do for my next deal? I had invested in some syndications. I had invested in some properties in New York. I had exited those opportunities when I came down to Charlotte. And I was walking down the street and I saw that one of my neighbors was building a pool house in their backyard. And a light bulb went on in my head and I said, I've got a really big backyard. I bet that I could build a house in my backyard. And then I said, no, seriously, I think that I could probably build a house in my backyard. So I went and I pulled, having a legal background, I pulled my deed and I researched the zoning laws and figured out that my parcel of land historically actually was 2 lots. It was 2 city lots. The problem was the house was actually straddling the lots, kind of between the lots. So it didn't look like I'd be able to build on the second lot without demolishing the house. But I said, well, I'm pretty good at reading code. I read tax code for a day job and like hours on end, which would basically bore most people to, want to jump out of the window. So I said, I'm pretty good at reading code. So I kind of taught myself the zoning code, and I basically figured out that there was a way that I could subdivide my lots and reorient them for zoning purposes so that I could basically build a house in what used to be my backyard. Okay. Long story short. So I basically went through the approvals process with zoning, and I remember, this was very poignant for me. When I first had this idea and I sketched it out on a piece of paper, and I was, and I wrote down all the zoning restrictions, and I was like, I think this might possibly work. And I showed it to a surveyor, and the surveyor laughed at me. The surveyor said, you can't do that. You can't build a house in your backyard. That's ridiculous. Like, you're going to have to demolish your house. And I was like, well, it doesn't really work if I do that. That the magic of it is, that I can kind of create this buildable lot out of nothing. Like I live here. I don't want to knock my house down. So, I went back and I did some figuring and I spoke to another surveyor, and he was like, you know what, this might actually work. You've got some zoning issues, but I can draw it up for you. And I said, don't worry about the zoning issues. I'll deal with that. You deal with the surveying. So I went through all the zoning process, and ultimately there was one last hurdle that I had to jump through. So basically, there's a rear setback requirement, and the porch on my existing house was encroaching into that. And I found an exception for that encroachment. But the problem was there was a chimney inside of that porch, and the chimney is considered part of the house, not the porch. So if the chimney didn't meet the setback requirement, the whole project would have been canceled. I wouldn't have been able to do it. So I said, you know what, it's close enough. I'm going to pay the surveyor to go ahead and do the survey, and we'll find out what the measurements are. So I paid him, and a week later the survey came back, and the chimney part of the house cleared the setback. It was literally a fraction of an inch. It was about a quarter of an inch.
Wow.
So it's kind of like, if you put, I just believe that, if you put this energy out into the universe will give it back to you, and that doesn't mean it's going to be easy, but if you believe in it, you have to see it through to as far as you can take it. So I just felt like I had to do this. I was compelled to do it. So that was sort of the turning point for me, and then, the easy part, frankly, on this project was building the house. I ended up, hiring a contractor. I went through the architect plans, I did all the zoning work myself, ended up, subdividing the lot, building a new house. I moved into the new house, renovated and sold the old house. And then I sort of took all that equity that I had just created, that was the magic of it, right? I'd created all this equity that didn't exist because, everybody told me that I couldn't do this, so that this thing didn't exist, and I created it, and I took that equity and I paid off all my law school loans.
Oh, nice.
So to your point about, what is it that holds people back? For me, that was kind of like the big thing in my head. That was the big fear of, well, I've got these law school loans. Obviously, I've got a family to support, and a mortgage, so I can't make a career change. But to me, and this was last year during COVID, right? So this all happened at once. So basically, I finished the project, I paid off my law school loans, and I said to myself, this is the universe trying to tell me something again, and I'm going to listen. I basically, followed, what I felt I should be doing. I got, this great result. I paid off my law school loans with real estate investing. So I said, I feel that this is what the universe is telling me that I'm supposed to be doing. So that was when I left the practice to do this full time. And I said, this is what I want to do. I enjoy doing this. I believe in it. And like, this is like my chance to do it. So it was, again, to my point about, life throwing everything at you all at once. Like it happened all at once. Like I finished the project. I moved next door into my new house. I sold my old house, paid off my law school loans. I left the practice, and then I started my firm doing this full time, New Level Investments.
Amazing,
Oh, wow.
amazing.
Yeah.
So now talk about what is your guys' focus? Is multifamily type of asset property type that you guys invest into?
It is. So, and to me, and I'll try and boil it down for you. And I think we really have, a lot of the same philosophies on investment strategies. I watched some of your videos. I think in one of your videos you said you really tried to target C properties and B neighborhoods for value add. To me, that's sort of the secret sauce in multifamily. And I basically look for. To me, it's about seeing value where other people don't see it. And it's about finding something that's undervalued and saying, I have a vision for, this asset. And to me, an apartment building, a multifamily project is a business. So I look at that as a business opportunity. So I say, if you're going to buy a business, you look at something and you say, there's something here that's not being realized. And I think that I can take this, I have a vision for it. So that's what I really love about multifamily is that you can, the value of it, it's really, you can create that value if you have a vision for it. So that's what really appeals to multifamily for me, and the scalability of it, right? Like if you really want to get into the technical aspects of it, there's so many areas for, I like to say like cash efficiency, tax efficiency, economies of scale in terms of building out a business. When I explain it to people, I say, just think about it like in practical terms. If you owned 50 houses, you'd have 50 roofs and 50 boilers. If you own an apartment building, you've got one roof and, one big, boiler system. I mean, just think about the economies of scale there, where you can focus your cost center, of your business and consolidate everything and really run it in an efficient way. So there's just so many things that, just like made sense to me. Especially when you get into like the tax and financial side of it, because there's so many sort of tax and financial efficiencies with multifamily that it was just, for me, it was like, this is it. It was like, aha, this is it.
Yes, but another step here is also about, we'll get into the tax advantages of multifamily and what have you, but let's talk about this concept of syndication, because, these larger assets, small ones allow it too, but it's not really the syndication process, not really private equity. It's a joint venture. You can buy a place with a partner, fix it up,
Sure.
depending on your backgrounds and experience,
Sure.
and then sell it for a profit. But when you talk about these larger multifamily assets, it allows for this concept of syndication or real estate private equity, where two groups come together: the management group, that's the general partner, and then the investors, who are basically the silent partners, and creates this partnership, creates this dynamic, and it creates profits across the board. So talk to us about that concept of the business, the legalities around it, and then we'll get into the benefits that exist for both partners when it comes to this syndication process.
Yeah, that's what I love about it. To me, that's the part that excites me, because that's sort of, my background is, it's all about structuring deals. So, in my former professional life of practicing law, I mean, that's what I did, right? I mean, sort of, you've got sort of all these pieces, you've got all these moving parts, you've got all these people, and it's about figuring out how to mesh everything together in a way that sort of, is a win for everybody. I always like to tell people, I mean, I firmly believe that a rising tide raises all boats, and that, if it's all about, if everybody has the same vision and the same interest in seeing the project to succeed, to me, then, I love putting the pieces of the puzzle together to find a way to structure the deal. Like you said, I mean, there's so many different ways that you can structure an investment. I mean, you can structure it as a joint venture, you can structure it as a syndication. I mean, I used to draft, like partnership agreements, right? There's so many different ways that you can draft a partnership agreement. I think sometimes people get stuck in one mindset and they say, okay, I have to have, this type of investor and this type of return. And I don't approach things like that at all, because when I was in my practice, it was never one size fits all, right? Like every client is different. Every deal is different. There's not one deal that I worked on that was the same as the next. Now, that doesn't mean that we're reinventing the wheel for every deal, right? Obviously, we've done this before. We're not going to start from scratch, but to me, like somebody who's a real value add as an advisor sits down and they don't tell the client, this is what we're going to do. The first thing they do is ask the client, what do you want to do? And then they listen. Okay. And then they say, okay, I'm going to figure out a way to accomplish what you want to do, not force, the way that I do things on you. So that's the way that I look at a deal. It's like, you look at, all the stakeholders and you say, what does everybody want to accomplish here? Right. And then you just sort of mold it, I mean, to me, that's the beauty of like partnerships is like, I can make a partnership agreement, say anything, I can, there's, and they're like, well, we've never done it that way before. And I'm like, well, let's try. I mean, who's to say I mean, it's just, there's 1,000 different ways to slice a deal. I mean, that to me is like the exciting part of multifamily real estate,
For sure.
putting together the deal.
Yeah. And then let's talk about that dynamic that exists between a general partner and limited partners. So in your case, for example, if I was a limited partner looking to invest and the GP happened to be a tax attorney, I'm like, it creates a level of comfort. Also, if I happen to be a lawyer limited partner, I'm like, hey, this guy speaks my language. There's a lot more comfort to be able to invest with someone in that space. So tell us, have you harnessed this connection that could possibly exist between yourself and such investors, or do you have any plans for that? And what is your mindset about this kind of idea?
Yeah. I'm relatively new to capital raising. I've been focusing on building up capital raising capacity this year. I think it's natural for me to sort of be able to sort of speak the lawyer lingo, if you will. I think obviously I'm looking to build out, a lot of the relationships that I've developed in my practice. So I think a lot of the folks that I'm going to be looking to work with going forward are probably attorneys. I think they're really really an ideal sort of target investor, right? Because they're so busy in focusing in their career. It's such as I know as well as anybody how demanding it is on their time. So they don't have time to be actively involved in a real estate opportunity. But a lot of them they get it. They get once you explain it to them, how you're going to structure things, they want to put their money to work. They get what you're trying to accomplish, and I think there's definitely a trust factor there. I think Ava, in one of your earlier videos, I think you mentioned no trust and
No like and trust.
No like and trust. No
It
like
all
and trust.
starts with the know, like, and trust, definitely.
No like and trust.
Yeah. I
So
always
it's
take it down the triangle. It goes from know, and then it goes down to like, and then
yeah.
trust.
And my thing is I'm almost brutally honest with I've always been very honest with my clients, right? So to the point of I'll talk myself out of business
Yes.
because
Yeah.
to be honest with you, because my focus has always been on building the relationship.
Yeah.
So I think that that's a differentiator for me. Is like I'll tell my clients, like they'll come to me and say, should we be doing this planning? Should we be setting up this estate plan? Should we be doing these trusts? And I'll say, well, typically, here's the cases where we might have value in this, and this might not be your situation. This might not be of value for you right now. To be honest with you, I can draft it for you and charge you thousands of dollars to do that, but I don't see that there's an immediate benefit to that. If you want me to do it, I'm happy to do it, is what I would tell people. And then they'd say, oh, well, thanks for explaining that. I guess I don't need that because somebody told me I did. I'm glad I asked you. And some lawyers are like, you just talked yourself out of out of fees. And I'm like, yeah, but the next time when they really need something, they know who to call.
Yeah,
For
you
sure.
actually gained respect from them
Yeah.
as
And
well.
I'd rather have that because, I'd rather have a smaller group of clients that, sort of have that relationship as like you're their trusted advisor. To me, it's not just about the fees. Like has to be something more than that. So my focus, as a sponsor is, and I'll tell people, syndications aren't for everybody. You can tie up your capital for a significant amount of time. If that's something that you're not comfortable with, you really need to think about that. You really need to be comfortable with what the objectives are and the business plan is for this investment. And if you're not, this might not be the right one for you, because I don't want, an investor that's going to be really unhappy, that, is going to be, I don't want to soil that relationship. I don't want that negative energy
Yeah,
in
and
the
you came.
business.
Yeah, and your background, you came from the fiduciary duty mindset, because in
Yes.
law they keep teaching you guys that. So you have that fiduciary duty for your clients. Some people in this space that we're in come from sales background. Like my background was construction and development. Ava was in real estate as an agent. So both of those have some form of fiduciary duties to it. So we understand that, hey, that the customer or the investor or the partner comes first, and that this is a long-term game. So great, we do one syndication and we have some happy investors. But if you have unhappy investors, that sticks with you for a long time. So it's very important that initially, as general partners, we make a very
Definitely.
astute decision for the deal we're getting involved in, and not to be just sporadic on the deal that we're choosing and what have you, but also then to have that kind of the nurturing of our investors. The communication is very important. So great conversation.
So
Yeah. Oh, sorry. Go ahead. I was going to
Go
do
ahead.
quick points to finish up on that.
Please. No, please go ahead.
One quick point. Most good lawyers know that the easiest way to get sued is to not return your client's phone calls. So so communication is absolutely essential. And two, I always tell people, look, you're not going to get rich off one deal. I'm not going to get rich off one deal. That's not what I'm looking to do here. I'm looking to build up a portfolio, and I'm looking to build up relationships with a group of investors over the next 5, 10, 15 years. And if you're not happy with the first deal, you're not going to reinvest with me. So I'm looking for that longer term sort of relationship where it's not one deal. So and I tell that to everybody just straight off. So
I love that. That's great. Let's see. So there's two things in life we can't avoid, okay? Tax and death. So let's go ahead and start talking about
Great job on ruining the mood, Ava. Come on.
Because Nick's going to get the excitement going right after this, because we're going to talk about the tax benefits that exist in multifamily syndication. So why don't we talk about that? Because that's an exciting factor.
Sounds good.
Okay, you're excited about it. All right, I'm getting pumped back up now.
People want to know. People want to know how can they save.
I get excited about this stuff, but I'm a tax geek, or a reforming one. People used to tell me when I was in practice, you're actually fairly personable for a tax attorney, and I would say, well, I'll take that as a compliment. Thank you. I know it's a little bit of a backhanded compliment, but I'll take it. So obviously, I recognize that, we have a little bit of an international flavor to our audience today. So I would preface it by saying I'm only speaking to U.S. tax considerations. But aware that there's like the Canadian U.S. tax treaty, for example, and things like that have crossover. But from a U.S. tax standpoint, real estate is very tax favored. For one, I mean, you've got tremendous depreciation write-offs. You've got cost segregation, things that you can do basically from a tax standpoint to basically accelerate and take deductions so that you're really minimizing your immediate tax impact of any cash flow distributions that you're receiving in a syndication, for example. I like to tell people, just for simplicity's sake, say you invest, $100,000 in a syndication, and there's an 8% annual cash-on-cash return. To be honest, I can't obviously guarantee particular tax results, and I'm out of that business of giving people personal tax advice. But in many cases, quite honestly, I've seen syndications where a lot of that is very low tax or no tax. That $8,000 return, for example, if you will. And then there's a lot of different things that you can do to defer taxes, even when you have a gain recognition event. I'll mention that I'm very big on cash out refinancing. I love cash out refinancing. I don't know if you're familiar with this. There's this philosophy in investing, the velocity of money, basically. It sounds more complicated than it is. It's just the quicker that you can reinvest your initial cap, get it back and reinvest it, the quicker that you'll compound and build your wealth. So I'm a really big proponent of that. And that to me, that's, if you can sort of like graph that out, it's really powerful, because that's where you grow your wealth from, linearly to exponentially, where, this idea that, you own this asset that's generating very low tax cash flow and it's coming back to you, and you can get your investment back and then invest it again in another deal, and then again in another deal, and now you own 2 or 3 properties that are all generating cash flow, and you still are using this sort of initial nest egg of capital invested. To me, that's a tax, that's not a tax recognized tax event. If for U.S. tax purposes, when you do a cash out refinance, it's not treated as taxable income. So to me, that's very powerful that you have, you're not sort of in the business, they used to call that leakage. Basically where you have a transaction and you're paying taxes on that transaction, and it's eroding your capital. You have this capital base that's not being eroded by taxes, and instead it's continuing to grow and grow and grow over time, tax-free. I mean, if you sort of visualize that and graph that out, it's like, wow. Like when you look at that, it's like, it's powerful. It's
Yes.
powerful, very powerful.
Nick, taking a step back now, aside from the syndication, just looking at a real estate, kind of a multifamily real estate asset, right? If the three of us, we were going to buy it, not syndicating. We'll talk about syndication, and we saw how that tax savings would also flow through to the investors that are involved in this structure. But looking at that, to us, buying a multifamily asset that's the occupancy is high and it is cash flowing, what are the immediate tax benefits that exist? And if you can touch on that, I think that obviously there's maybe can explain the concept of cost segregation initially, and then we talk about the bonus appreciation.
Yeah. So basically, the way the U.S. tax code is set up is most people would call them write-offs. Basically, you're allowed to sort of accelerate or take sooner deductions for tax purposes, so that the income that you have to recognize for tax purposes is reduced and reduced and reduced, basically down to a very minimal level, so that when you do receive distributions of cash flow from your investment, you're paying very little tax on that. And so depreciation is one that a lot of people know about. Basically the concept is the asset has a useful life, the building, and they're recognizing that, okay, over time that value erodes, and they're allowing you to sort of upfront as opposed to waiting until you sell it.
That's very paradoxical, because real estate always gains in value, but now you're saying the government, who's always there to take our money, actually allows for this structure to depreciate in value. Explain that.
It's very tax favored. It's very taxpayer friendly. But that's the U.S. tax code. But the catch is they're going to get you back potentially when you sell it. But there's ways to plan around that as well. Yes. But it's not forgiveness. It's deferral. is the concept. It's deferral. So that's the big thing is when people say tax-free, I think tax-free is a little bit of a misnomer. I would say tax-deferred. You're putting off paying taxes on that gain to when you sell it. Now, there are things that you can do to structure the sale to defer even longer taxes, and we can get into that. But the concept is, yes, they're giving you an upfront tax benefit that in theory, they're going to capture later on when you sell it and you have all this cash, and then they're gonna send you a big tax bill if you aren't smart enough to maybe do some planning around that.
Got it. So the three of us, we buy this 100-unit building, and it doesn't really matter what age of the building it is, or right away from the day we buy it, that this building is going to devaluate. So we could say, hey, this thing is going to devaluate, I believe it's 27 and a half years, if I'm right. But then, hey, government, we want to be able to write off those taxes, what we have lost, we're going to lose on this structure for the next 27 and a half years. We want it upfront to then offset the income we're going to make from this property in the first few years, kind of concept, right? Is that mainly what?
Exactly. Yeah. Anytime you buy a property, and when I say property, I don't mean just raw land. I mean a building, a structure, because the building itself is considered property. Land is land.
Yes.
So the building itself, has sort of a value for tax purposes. And yes, the tax laws in the US say when you buy that, in an arm's length transaction, that over a period of time, depending on what type of property they classify it as, it could be 27 and a half to 39 years.
Yes.
Depending on what type of property, that over the useful life of that property.
Well, let me ask you, is multifamily considered resident? Is it considered commercial, or is it? It's
commercial. It is commercial.
Is it 39 years or 20?
It's generally 39 years for commercial under U.S. tax law.
Okay, we some of the research we were doing was multifamily was.
Yeah.
But maybe.
But that's okay. So they take that 39 years and then accelerate it to 7 years.
So yeah, so that's the accelerated depreciation. So and this changes a lot. And I actually think, again, I have to caveat this by saying I'm out of the business of giving paid legal tax advice. But I know something about it, so I'll share it. I tell people that I'm not giving you legal advice, but I also won't pretend that I don't know anything about it and say, go pay your lawyer a bunch of money to, so basically they write provisions into the law that say, okay, we're going to give you even more of a tax break. And the building, has other components in it, like, say something that's attached to a building, like an HVAC system, or something that you improved. And they're going to say, okay, you made an improvement, and we'll treat it as separate from the building. And that's where the cost segregation goes into, where they say, okay, there's tangible personal property that's not considered building, that we're actually going to let you depreciate even quicker than the 27 and a half or 39 years, whatever the case may be, which is even more of a benefit.
Got it. And in that case, you got to bring in an engineer to do that.
Yeah, to do that report called cost segregation. And then from there, you take your cost segregation report. And is there something called bonus depreciation now, where you can then?
There is. Yeah, there's all sorts of fancy depreciation.
Going on and on.
And they change it every year too.
Right.
I don't even keep up anymore, to be honest with you. I think they're phasing out some of the bonus depreciation this year. That's one of the things that they change like every few years.
Right.
But there has been something called bonus depreciation, where they'll put this into the law for a few years and say, okay, we're trying to spur investment. Business investment is usually the rationale. And when people buy, usually it's new equipment, and they put this new equipment into service, we'll give you even more depreciation deductions to sweeten the pot, to spur business investment is usually why they do it. So yeah, there's all sorts of, and it's not loopholes. I mean, it's written right into the law. I mean, it's whether you agree with it or not. I mean, I used to say I don't write the laws. I just tell people what they say.
Yes.
Sure.
So it's like, if it's there, I'm going to use it to my client's benefit.
Sure.
So,
and then now on the back end, also tax savings. You got, obviously in the US, you got the 1031 exchange, again, the deferral program to incentivize more business and commerce
to roll
as well.
over into another project, same value or higher.
Can the 1031 be used for the syndicated deals? Is that something that can?
It can. I think a lot of syndicators aren't aware that it can, or with anything with the tax law, it adds layers of complexity. So being a tax attorney, I know that it
unless the
can.
sponsor is a tax attorney, then you're all good.
I know that it can. I'm willing to actually work with investors who have 1031 proceeds and are looking to roll them into a syndication. It does add complexity to the deal. There are time restrictions, like you have to identify a property within 90 days of when you, sell your 1031 property. You can't take the proceeds. You have to place the money with an intermediary. There's all sorts of rules that you have to follow, and there's a lot of them. So a lot of syndicators don't want to get into that, because if you sort of mess it up, it could create a lot of problems for your investors. But I'm not used to doing things the simple way. So, I'm a glutton for punishment. I'm willing to work with 1031 investors, but you can structure a 1031, and there's a couple different ways to do it. You can use, there's certain types of trusts that you can use, or, you can also set up LLCs as like a special purpose vehicle to basically set up a parallel structure for investors that are investing into a syndication with 1031 proceeds versus people who are not. And then there's a whole bunch of hoops and hurdles to jump through that I won't get into because I don't want to put everybody to sleep. But there are ways to do it. And I'm willing to work with investors who have 1031 proceeds. It is possible.
So now talk to us about, I guess, working with investors and any current projects that you're working on. Is there any, what's the markets you're looking at, and what is that perfect deal that you would be looking for you and your investors?
Yeah, so I focus in the Carolina markets, particularly North Carolina, that being my backyard. I think real estate is local. I think that you really have to understand the dynamics of your local markets. I personally would be leery of investing. As an investor, I've invested in other syndicators deals, right? And if they don't have a general partner who's local, boots on the ground, who knows the market, that to me is concerning, because real estate markets are very local, so you really have to know your market. So I really focus, for me, I do source deals. I love underwriting deals. I love looking at deals. I stick to the markets that I know. I really stick to the Carolinas. I don't underwrite deals outside of the Carolinas. So I definitely look in, Charlotte, which is a very hot market right now, Raleigh, which is another very hot market that everybody knows about. There's a lot of other markets in the Carolinas that, I think people are starting to become aware of. There's definitely opportunities. I think it's a growing market. I think a lot of folks are familiar with the value-add model that you yourselves are very familiar with. The concept being you sort of look for something that is underperforming. And when I say underperforming, I mean, basically they're not generating the income that they should be, either because they're not charging the rent that they could, because they don't have market level product, or they are mismanaging or undermanaging or overmanaging the property to where their operating expenses are not where they should be. So in syndicator lingo, it's all about the NOI, pushing the NOI. Like any business, that's where you can really drive value for the deal to see, okay, how can we make this a better business? How can we make it more efficient? How can we make it more profitable? So that's sort of the really high level approach that I take when I look at properties. I will say, it's a competitive market right now. And, I think the cap rates are really compressed, which basically means to me that people aren't necessarily properly taking into account risk, because as you well know, not every asset is the same. Like I said, going back to this concept of asset, a building being a business, not all businesses are the same. Some have different risks. Some apartment buildings have different risks, either because of their location or because of the year that they were built or the materials that they were built with, or the management of the property. There's many different reasons why they have different risks. And if the cap rates are compressed, that means that people aren't differentiating between, a brand new, Class A product that is brand new, that's high-end finishes, high-end amenities. It's something that was built in the 70s that, hasn't been updated. Maybe there's deferred maintenance on that. Maybe the area hasn't quite turned. To me, I mean, those are apples and oranges. So when you start telling me that these things are, the income from these two properties are valued approximately the same, I'm looking at them and saying, they don't look the same to me. Like, go walk around the block. Does that look the same to you? So that's concerning to me when I see people come in from outside of the market and, they're paying, for a C property and frankly, a C neighborhood, what was really a B price or an A price. I look at that and I say, ooh, that makes me a little concerned.
Sure, for sure. And now, talking about that point that you made about the value add business model, I talk a lot that, my background in real estate and investing for a long time, to be a successful real estate investor, you want to look for two main components that real estate offers: appreciation and cash flow at the same time. If you can, you could be successful having either or, but if you can have them combined at the same time, the chances of that real estate project being successful is very high. Mm-hmm. Now, in what we do, not only the assets that us, ourselves and yourself and other groups, is what we do is we look for properties that have a high chance of appreciation. So they're in high growth markets. We look for properties that are cash flowing, hopefully from day one or as soon as we're done doing some upgrades. But we also go in and do forced appreciation. So we force appreciate an asset by adding some form of value add, and the value add doesn't necessarily have to be renovations. The value add could be any kind of value add. Getting rid of some bad tenants, that's a value add, So it's a business model that I love. It's an asset class that I love. It's a property type that I love. So you're speaking our language here, definitely.
100%.
Yes.
Nick, what advice would you give to a busy professional looking to start passively investing in real estate? I'm sure you have some really good advice to give.
Yeah, I mean, I guess it all starts with education, which I'm sure that you guys are familiar, because I always tell people, invest in what makes sense to you and what aligns with your values. Because I don't think there is one best investment. People ask, well, why would anybody invest with you, Nick? And I say, well, it's because they're comfortable with me, my vision, my investment strategy, my professional background. We've been able to build a relationship. You work with the people that you feel comfortable with and you trust, that share your values. So I think that they've got to do their due diligence. And once they've kind of gotten familiar, I guess with what a syndication is and how it works, and I try to put up educational material, and I know that you guys do as well.
I love your posts on LinkedIn, by the way. I enjoy reading your posts.
Oh, thank you. I appreciate that. And I've dipped my toe into like the YouTube video world. I'm not trying to be a social media influencer. I think what you guys do is phenomenal. You have a really good, you're putting really good content out there, and I really applaud you for it. I do the best I can. I'm just a lowly tax attorney turned syndicator, but I recognize that you have to sort of put yourself out there.
Absolutely.
It's not for everybody. Not everybody's gonna like what you have to say. That's okay. You got to have thick skin about it. But recognize that your journey and your your beliefs and that, it's going to resonate with somebody. You just kind of have to find your audience, find your tribe, as they say.
Find your tribe.
Yeah, definitely.
Yeah, that's really
cool.
Great.
Awesome.
So that'd be my advice to somebody looking to invest. Find your tribe.
Find your tribe.
Amazing.
Find people who are like, you know what? I like this guy's vibe. I like what he's saying. I'm learning something from him. Follow them for a while. For me, I always say, pick up the phone and call me.
Yeah.
I'm very accessible to my investors because I view them as my clients. That's why, to be honest with you, I don't want to have thousands of people in my, because I don't want to necessarily be available to thousands of investors. That's why I don't do sort of mass marketing. I'd rather have a small list of people that I know, that know me, that we can just continue to work together.
Amazing.
So that's my model.
Perfect.
Very
Perfect.
good.
All right. That brings us to the next segment of our show.
10 championship rounds to financial freedom. Here's the first question, Nick. Who is the most influential person in your life?
Who is or was or?
Who is or was?
Wow, that's a good question. Yeah, I guess it kind of depends at what phase in my life. To be honest with you right now, I think the most influential person in my life, I'd have to say my family.
Very good.
I think that's my why. I have 2 kids. My son is 6. My daughter is a year and a half. And a big part of why I chose to do this is because I want to spend time with them while they're young, and this allows me to do that. I work from home, and so that's a big part of my why and why I do this. So
incredible.
Nice.
Perfect. Now, what is the number 1 book you'd recommend?
As far as real estate goes, I think one book that really opened my eyes was the 𝗖𝗣𝗜 book. For people who have no idea what that means, I guess it's buy, rehab, rent, refinance, repeat is a mantra. And I think to me that sort of encapsulates, that was sort of an aha moment for me, and where I was like, because they talk a lot about efficiencies in that book. And I'm big on efficiency, and they talk about like tax efficiencies in there.
Yeah.
So like when I read that book, something clicked for me, and I said, well, if you could do this in single family, why can't you do this for buildings?
Yes.
That was immediately what I said when I read that book, and I said, this
Sure.
makes a lot of sense to me.
Yeah, and sometimes if I'm having a difficulty speaking to an associate or an investor about what is our business model, I usually say, just see us as fix and flippers. We buy a property, we fix it, we flip it. You just happen to be our partner in the process. So the scale doesn't really matter.
Yeah, for sure. Now, next question. If you had the opportunity to travel back in time, what advice would you give your younger self?
Ooh, boy, what advice would I give my younger self? That's a good question. Because my mentality is I think as everybody has their own journey and everybody has faced challenges, sure. And I don't regret any of them. So I feel that like all of them have put me in a position to where I am today and prepared me to do what I'm doing today. And I always feel like if you sort of follow what you believe that you're supposed to be doing and take the next right action, you'll always be exactly where you're supposed to be. Even though you think like, why isn't this happening faster? Or why am I having a hard time finding a deal or finding a partner or whatever it is that you're focused on. I kind of tend to believe that things happen at the pace that they're supposed to happen at, regardless of what your plan is. So I guess my advice to my younger self would be patient, because I'm not patient.
Be patient. There you go.
That's a good one.
Nick, what's the best investment you've ever made?
I would say the best investment I've ever made is in myself. I always tell people to invest in themselves.
Nice.
I think that you'll always get the highest return from investing in yourself. Invest in your education, invest in your career, invest in your future, invest in your retirement, invest in your family, invest in your health. Investing in yourself. Always bet on yourself.
Great advice.
And very good advice. Now, what's the worst investment you've ever made?
What's the worst investment I ever made? I think the biggest thing to lose to me is time. Because to me, time is sort of the one non-renewable resource that you can't get back. Mm-hmm. So I tend to invest in people a lot, because I want to sort of believe in people and help people, and sometimes, unfortunately, that's not reciprocated. So I think especially running a business, it's tough because you have to be really selective with your time. You can't always give everybody your time. So I think that's tough. I think you, especially once you've got a family and you've got little kids, and you really kind of have to be a little bit greedier with your time with people. So to me, I guess it's time. That's sort of the only thing that I ever sort of say, I spent too much time doing this, or I wasted too much time. hanging out with these people when I could have been, doing something better or more productive, I guess.
All right. Next question. How much would you need in the bank to retire today? What's your number?
That's a really good question.
We're putting him on the spot, hey?
Yeah. No,
This
these
is
are
meant
all
to be
really
like
good
that.
questions. These are really good. I think these are really important questions that everybody should ask themselves. To me, part of my why is like financial freedom, and it's like, okay, what does that mean? Well, to me, it means like, okay, I own my time. And that has particular meaning to me because, in my professional career, I literally didn't own my time. I lived by the billable hour, and it was very stressful. So, to me, I mean, if I can get up and do what I want to do, and with my time, I mean, it's hard to put a number on that. I mean, to me, the thing with real estate is I don't know that I'll ever sort of retire. As long as I can sort of, pay, like I said, the big thing for me was sort of paying off my student loans. I guess paying off my mortgage. That would be the next thing for me. So I don't know. I mean,
but also whatever will allow you to have that pleasure of time freedom to do what you want. There's a financial component to allow that as well. So that's
Totally
great.
Have that cash.
Yeah. I mean, I guess to everybody, it's whatever their lifestyle is. Basically replacing your salary. Whatever your lifestyle demands. I mean, to be honest with you, when I was in practice, I had some clients whose lifestyle demanded $250,000 a month, which for some people is plentiful. That's I don't need that much, But whatever, I'm very low maintenance. So as long as I can spend my time with my family, I'm pretty much a homebody, So I'm happy doing what I'm doing, and to me, like as long as I can continue to do this, and I don't have to go back to work for somebody else.
Yeah.
Cool.
Then you're set.
Yeah, I'm good.
Now, next question: if you could have dinner with someone dead or alive, who would it be?
Oh man, you guys have coming up with all really good questions today. That's a really good question. It's hard to narrow that down to one person.
Yeah,
it's really hard to narrow that down to one person. I think growing up, I was a big sports fan. So I think growing up, I sort of idolized a lot of sports athletes. I don't know that I sort of idolize sports athletes anymore, but I think a lot of kids do. So I think for me, it was probably a lot of athletes. To me, somebody that is like an idol is somebody that transcends what they do, that makes them famous, if that makes sense. So I'll give you an idea of that. Like Muhammad Ali, for example. To me, he's an icon because, what made him famous was boxing. But what made him an icon, that he made an impact on the world outside of that. So to me, it's sort of like, you can, so I'll put him out there.
Perfect.
As an example. Yeah, I think he's a good example of that.
Nick, it's funny enough that's my number one pick.
Yeah.
Oh, really?
Yes. Dead or alive, that's my number one pick. And
wow.
I mean, the stuff he did in the, I'm a big boxing fan.
Are you?
And big boxing, somewhat of a historian, and what he did in the boxing, he was never, he was an undefeated. He lost to many different people and what have you, and especially at the tail end of his career. But what he did outside the ring, I mean, at time of when segregation happening in the U.S. and the Vietnam War and everything else, and just just a story of a man trying to jump off the building, and Muhammad Ali was there and just gets on the mic and convinces the man to not jump off the window. I mean, there's just so many different things in the man, and comparison. They always say best boxer. Maybe the man wasn't the best boxer, but as far as a boxing legend, he was definitely a legend. So I usually don't talk a lot in between questions.
Yeah.
I have to jump in because Nick was the first person.
Oh, is it? That's pretty cool. That's awesome.
And is the most recognizable name of a person, I believe, than anybody else. Muhammad Ali is the most recognizable person in the world, and internationally.
Oh, wow. I didn't know that.
Known name to for anybody. If you say to Muhammad Ali, most people will know who that person is.
Yeah.
Oh, wow.
Yeah.
There you go.
Okay.
Okay, two more questions left. The next one is going to be, oh, there's three more left.
Yes.
Sorry. If you weren't doing what you're doing today, what would you be doing now?
Oh, man. Nothing.
There you go.
To be honest with you.
He'll be building houses in backyards. That's what he'll be doing.
I'm glad I did that, but I wouldn't do that again. My wife would kill me. Nothing.
Nice. Okay.
To be honest with you, I would just be hanging out, like spending time. Like, to me, like the greatest thing is like, so just to give you an example, before this call, my son, who's 6, was teaching me how to play Nintendo Switch. I have no idea how to play a Nintendo Switch. But to me, it wasn't about Nintendo Switch. It was like, you know, he's, you know, at an age where like, you know, he's really into it. You know, he's kind of a gamer. Like, you know, he gets this new game, he gets excited about it. So for him to be able to like show you, you know, something that he's like super excited about is like, you know, to me, that's like pretty cool. Like, I'm like, how cool is that? Like, you know, because if I was practicing law, I never would have been, playing Nintendo Switch with my son in the middle of the day. Like, but to me, that's what it's all about. It's like, look how excited he is about, you know, playing this, showing me how to play this game. Like, this is cool. Yeah.
Cool.
Yeah, just one more quick story about Muhammad Ali. I just gotta say, I'm so sorry. I gotta say it. So
Sure.
he's a world champion, or is near. I believe he's the world champion, and he goes out to eat for dinner. He goes out to eat, and it's segregated at this time, so blacks cannot go to certain restaurants. So he walks into a restaurant. He's a world champion, a world heavyweight champion. So the top supreme athlete that there is, that title of a world heavyweight champion is the top. There's nothing above that.
Yeah,
you know, you can be the fastest man in the world, everything, but top, the heavyweight champion of the world is the man, right? So he goes to this restaurant, it's segregated, he can't eat. So the server comes up to him, and she, I'm not sure if it's she or he, but the server says, sorry, says the N word. Sorry, we don't serve blacks in this place. Mm-hmm. And then Muhammad Ali looks at her, he's like, it's fine, I don't eat him. I don't eat them, right? Yeah. I don't eat them either. So like, you don't serve them. They like making a joke. Like, it's fine. I don't eat them. But anyways, I had to come back.
Share that story with everybody. Sorry. That's okay.
And I'm really interested to hear the next question.
Yeah, coming from a lawyer, book smarts or street smarts? Good story. Book smarts or street smarts?
You know, book smarts don't matter to me if you can't apply it. To be honest with you, I've met. I've worked with a lot of extremely highly educated people who've been, you know, educated at sort of the most prestigious universities in the world. But to me, if you can't apply that to make a difference in somebody's life or in the world, then what point is it? What's the point? What's the point?
Right.
So to me, there's no monopoly on knowledge or expertise. You know, I think that going to a prestigious university is one way. I think, you know, starting a business with no formal education is another way, you know, having life experience. And I always think that there's something to learn from everybody. So yeah, to me, it's like, you know, I'm very practical. It's like, you know, you could know a lot, and I think that's one of the things that kind of peeves people about a lot of lawyers. A lot of times, you know, they know a lot of stuff, but it's kind of like, okay, well, you know, what are you going to do now? What are you going to do about it? I mean, that's what I always say. It's like, okay, do something.
Nice. All right, Nick, this is the last question. If you had $10 million cash and you had to make
No, it's 1 million. 1 million.
Oh, sorry, did I say 10?
You said 10, yeah. You're making him a multi-millionaire already. Oh, go ahead, Ava.
If you had $1 million cash and you had to make one investment today, what would it be?
Multifamily.
There you go. That's a wrap. Awesome.
I would. Yeah, that's it. That's it.
Very good answer.
Yeah, what are we doing here?
Most consistent answer. Everybody keeps saying multifamily.
Because we got multifamily here. High five.
It's not even close.
Yeah.
There
awesome.
You go.
Hey man, that was a great show. Really enjoyed it. It's probably one of the longest shows we've had, but go ahead, Ava.
I warned you that you would have to edit it, didn't I?
No edits.
No
No,
way.
we're gonna have snippets of it, but no edit at all. But go ahead here.
Yeah, Nick, what is the best way people can reach you?
Yeah, I mean, so my website is newlevelinvestments.net. You know, and also you feel free to email me at nick@newlevelinvestments.net. I'm very accessible. I like to, you know, I have a blog on my website. I try to post media I hope to, to share things that help people in their journey.
Amazing. Thank you so much
Awesome.
for coming on
Thanks
the show
for coming
today
and really
taking the time.
appreciate it. I'm sure a lot of people will take lots of, golden nuggets
nuggets.
away from this interview. Thank you, Nick.
Thank you.
Thanks for having me. It was a pleasure. Great discussion.